Is Bitcoin acting in such a way that it's telling us it's ready to go for another leg down? That's the question I asked myself as I was looking at the daily formation that you can see over here of the Bitcoin price action. And there are three elements that caught my attention, actually four, and I want to go over them in this video. The first one is this level over here being worked on 3 times. And that's an important level because this is the low that was made when the $28,000 was touched, before we see this consolidation leading into this puke, and then that. So what's very important is that we have this potential support that did not hold, and now we are attempting to confirm it as a resistance. As you can see, the line is like literally just touching it. It's like from this point to this point is like wee. So just got towards it. Now you could say that these support and resistance lines are nice, but just alone it doesn't mean much. We need to start seeing some confluence. And the very first element of confluence is right here. If we are going to take this is a Fibonacci, but the blue line is the 50%, which means that at the blue line we have gone from here to here, and then this is the half. So now we start having two interesting elements. First, we have a support turn resistance that had to be tested and just was tested at a level that also happens to be the half of the downward leg that broke that support. I know it's just a bit too much. The downward leg is this leg. It went down. Yay, it's a leg. Now, it's a leg because it looks like a leg and because it's a leg. And so it came down to here. The third element that is very interesting is how this leg we just mentioned actually realized itself, with this very big candle breaking this potential support and then coming down into the very last puke here that reversed in a V shape. And this is very important because in my book, this whole area here is a form of a gap. Now, without getting too technical into why it's a gap, the simple way of thinking about it is that even though there is no actual gap of price, but the price just like went towards it. It did not even try and take a moment to confirm, reject, fight. It just went through it. So even though the crypto markets don't close, the absence of any fight in this area, of any rejection, is a form of a gap. And usually gaps like to be filled. And as a matter of fact, guess what's happening here? The gap was filled with a lot of volume. We went down and then we filled it. Here it was the same thing. We went down. This is also a gap, and then we kind of filled in this area. This was more rectangle, which kind of brings it into a flag, which is more of a downward continuation, which is nice. This, however, over here, if you try and draw it differently, really is a rising wedge. Now I'm gonna cheat a little bit. I'm gonna put this over here, but what you want to see is this part of the rising wedge coming in here horizontal, which means that we're going up, just cruising, making higher highs, higher lows, higher highs, higher lows, double, triple top, and then the low, and then this comes down. So again, this wedge on its own can be a sign, but when we combine it into filling a gap, reaching a support, turning into the resistance at the half of the leg, that's very exciting. It's very interesting, especially that if the day closes as it is right here, this is a 1, 2, 3, 4 times swing failure, which means that the price tried multiple times to break and it could not. There is a massive wall over here telling you we're not going there. Now, the question becomes, if this becomes confirmed and the price wants to go down, what's going to happen next? Especially that we are looking at a relatively strong downward market. So there's a couple of scenarios. Of course, the price can actually go up here. I'm not going to go over these potential scenarios. There's some room of seeking this resistance over here, maybe even going for a double top, which actually is the support turn resistance. There's this potential. But let's suppose that this is going to go lower, that this is going to be a bear market. The very first area of interest is, given this formation, we're going to take Fibonacci again here and take it all the way to here. It's these guys over here, which is the reload zone. I'm not gonna go too much into the reason as to why, but whenever I saw wedges, they tend to maybe be attracted to this level, and some liquidity might be sitting here. And the reason why this liquidity could be interesting is that given that we've been coming down all the way from $70,000 all the way to $20,000, if the price was to go down into this reload zone over here and stop, that would be pretty bullish, because this would be the last area in which the price wants to consolidate and then go up, because the price is just not just going to go up after it just came down all the way. Another similar scenario, but a little bit more aggressive, is going to this level here and seeking a double bottom. As a matter of fact, now that I'm drawing this line, what I find to be interesting is that the way this could happen right now, especially after this very long and slow and meandering process, is that we're going to come collapsing. One way of thinking of the collapsing is what the euro is doing right now, but we're not going to look at this chart. And of course, the last scenario, there's two scenarios actually, is that what if this level doesn't hold? The first thing would be that, it doesn't hold and we keep on going lower. You could say that, we're going to take maybe some extension. We go from here to here into that with this potential 100% extension, which would be an AB equals CD potential, which is not so bad, because as you can see, this aligns with these areas and these areas, which was the areas formed when we were like building this bull market in 2020. But there's also a scenario, which is a potential future bullish reversal, is that we're going to come in here, we'll break it, but then it would go up, either with a wick, with a very strong defense, or with a bunch of candles, which essentially would signal to the bulls that, this is a support right now, and there's a defense. So a double bottom here would lead to the potential double top here, which could lead into a rectangle, which could lead into a consolidation going into a potential new bull market. Now, to be honest, I'm not quite sure what the fundamentals are right now. What I do know is that when all of this massive sell-offs was happening, what we saw is Celsius going down, Luna going down, a lot of liquidation. So maybe for us to have another very strong confirmed leg down, either more liquidations need to happen, or maybe Europe just goes in a recession, or the US goes in a recession, something major, which is a potential, never say never, of course. It would be quite grim for anyone who's holding Bitcoin, especially if they bought it over here. So that's it. Now, let's recap. What we're saying here is that we are in a downward bear market. We have a massive sell-off that is a gap that is being filled in a very classical, beautiful wedge way. But this fill right now reached half of the leg, which also happens to be a support that needs to be resistance. So there's a lot of interesting stories happening over here. And I could even add one more thing to the story. We'll just throw in there that we have dojis, two dojis here, one doji here, one doji here. There's a lot of dojis. And dojis are ranges when you look at a small time frame. There's zone of indecision. There's an area where there's some resistance. And it happens to be confluences between all of these, it's in the range of $2,000. That's pretty powerful. Again, this could resolve in another leg down, and we could see Bitcoin coming into $15,000, maybe $10,000. That would be pretty aggressive, but we've seen this happening back in 2019 when it went all the way from 20 to 3K. But it could also signal an area where Bitcoin wants to consolidate and start going bullish. And my only argument for this, my interest in is that this gap here was not filled. It's got to have to be filled. Speaking of gaps, don't forget that when 20K was broken, we never came back to it. We had to come back and test it. This is unacceptable. This gap was filled. This gap was filled. This gap was filled. This gap actually was filled right away. These were never filled. This was never tested. When you look at it, $12,000 was never tested. We just went through it. It's like whatever. And when I say tested, I mean I want to see something like, excuse me, I want to see something like we saw here. We have this level. We went towards it. We fought against it. We broke it. We came down. We tested, and then we built above it, and we went up. That's pretty healthy. This means this area was tested. Now it could be tested again on the way down, but it was done. Here, it was nothing. We just didn't care. And that also happens to be this level here, and just like this, there was no care. A lot of those levels were not tested, so they might attract, they might be magnets to get into there. So to wrap up, this could be more accumulation, actually more like distribution, building some power and some steam to be able to go down, filling a gap into this area. or this could be the beginning of a potential bull market, even though that's a little bit far-fetched because we need to see how this resolves, especially if it does resolve to the downside. But yeah, so without further ado, I hope you found this to be useful, instructful. Maybe I'll add one last note. If you were to take a position, and again, this is not financial advice, but if you are to take a position, you need to play all of the scenarios in your mind because this is how you would manage the position. So I personally don't like waiting for confirmation. I would even have had a limit order sitting here. I don't because I'm not currently trading. So again, this is not financial advice. So you would have a limit order sitting here and then you would wait to see what happens. If there is a big candle coming in and closing below here, maybe just move your entry to break even because you don't want to risk the candle coming in, starting to make lower lows, which would be a very powerful sign. It's a powerful sign because here we make higher lows all the way until here. So if you have a close, that's actually pretty good. You want to put your stop at break even. If you don't have a close, you have a wick, you also want to put your stop at break even. If you have the price keep on going down, just trail it. Use Hikinashi, whatever you like for trailing. Maybe trail with the moving average, maybe trail with the super trend, maybe trail with the ATR, whatever like works for you. And if the price decides to say, you know what, this guy is crazy, I'm just gonna go up. Well, you do have some level of defense here. You do have some level of defense here where you can add to your position and then try and break even, or maybe just remain short and take some profit. So the most important thing at the end of the day when you're taking a position is to know all the potential scenarios because then you can prepare your defense or your attack and how you stay in a position, your management of the position and the risk accordingly. And playing all these out is very helpful because if you do have a plan, if you have a visualization of where the market can go, then when you are in the position, you just are zen and you could just go watch Netflix and chill or whatever is your cup of tea. Right. Without further ado, I hope you guys found this to be useful. If you did, don't forget to leave a like, comment, all this kind of jazz, and share it with whoever might find this useful. And I will tell you until then, I'll try and make it a point of looking back at this chart in a couple of days, seeing what the price did. And until then, I wish you best of luck. Don't forget to have a little bit of fun. This is what trading really is. And be safe out there. Bye-bye.